What's up, aspiring traders? Hope you're all still doing good, as this is our final lesson, lesson 3. So, in this chapter, we will be going through the right approach on every winning setup. So, basically, the right way to stack your trades. Alright. To properly stack your trades, you must be able to identify structure breaks and changes of character. So, all this was taught in the first lesson, market structure. Before anything else, you must first understand the difference between breaks of structure and change of character. Alright, so to properly stack your trades, you must first understand where the market is coming from and where the market is heading to, right? So in front of us here, we can already see that this previous high was taken, right? This previous high was taken, so we can say it's a break of structure to the upside. So we will be looking forward for a demand, right? So a demand, we can already see that we have this last bearish candlestick before before the market broke this high, right? So we can mark it out. After marking it out, we extend it. We wait for the market to do what? To come all the way down here to mitigate the order block and go up again, right? Let me just mark this one as well because it's mitigated as well, right? All right, so let's see what the market did on this order block right here. By the way, this will be your trade. Let's say this is your trade right here. Just keep it like this with your stop loss below. You can add a few pips away from here, right? You can say 2 pips away or 3 pips away, and then your target can be what? This recent high, right? This recent high. So this trade would have been your 5% trade, right? So let's play and see what the market did right there. Let's play and see. The market did what right here? The market created liquidity, so which is double bottom, created double bottom right there. And we know when the market creates a liquidity like this, it must come back to do what? To take it out. So the market was fooling people to keep on buying at this level, keep on buying at this level to take it out. After taking it out, the market came all the way down to our order block right there, and then boom, check how quick the market moved to our take profit. You see, so when you stack your trades, you must first understand what? You must first understand where the market is coming from and where the market is going. So now, let's say you took this trade, right? And then you took this trade. Let me bring it back to here. After taking the trade, this is how you would approach staking, right? You wait for the market to do what? To break this high. Why am I saying so? Because this is the recent high that was created before the market tapped into what? Into our order block, right? After the market tapped into our order block, we wait for the market to break structure of this to break this high, right? After breaking that high, we wait we mark this as our order block for a re-entry, right? This is how you stack. So this will be your first trade, and then your second trade will be here, will be on this one, and then you can chase maybe 3% or 4%, right? And then your stop loss below. Let me just do it like this. Just say 3%, yeah. And then let's let it play. Boom. Wait. You only wait forward for a break outside and then a close outside. Remember, if the market if the candlesticks are like this, let me just move this one. If it's like this, just know that it's not yet a break of structure, but then it's what? It's a sweep of liquidity, because the market went out with what? With the wick and then closed back in the range. But then we wait forward for another candlestick to actually close outside. That's when we consider this order block. Um, let's see how the market go. Boom, another trade. Boom, take profit. You see, this is how you stack. You wait forward for a sign of break of structure or change of character. So this was an example of what? Of breaks of structure and how to trade with breaks of structure, right? How to trade with the trend, basically. All right, so this is how change of character work, right? Before I proceed on showing you how change of character work, I want you to first understand that this structure right here is still in a downtrend, right? Remember, I told you guys in lesson 1 that you must focus on what? On swing points, not substructure, right? If you focusing on a swing point, you will understand that this right here is what? Is a break of structure to the downside, because this is what? This is our last swing point that actually what? Broke structure to the downside, right? But I don't like to use last points. I like to use maybe second last or the first shift in price. You see, the first lows or the first highs, because they are the ones that shows you clear close of candlesticks. Like here, you can see that the market closed outside and then created another what? Another candlestick that closed outside as well, right? And then when we check here, we can already see that we have what? We have our last candlestick before what? This drop in price, right? And then let's see how the market moves. Let's see how the market moves. Okay, you can still use this one because now the market has done what? Has closed nicely to the downside, right? And then I won't be using this order block. I'll be using this one instead. Why am I saying so? Because the market closed outside of this low that was created here, right? Let's play it and see. Let's play it and see. Let's play it and see. Okay, let's see how the market reacts on that order block, right? Because we can already see the market keeps on creating what? Liquidity, and then boom, the market, look, the market did what right there? The market violated this order block, didn't even react to it. It went straight to the upside and then reacted of this order block that was created on that order block, right? And then it failed to break structure, but then came back to do what? Let's see. All right, so we can already see from here the order block wasn't respected, this one, right? And we noticed that the market has been doing what? Has been dropping to the downside, but look here, the market didn't respect that order block. So we must wait for what? For this high to get violated before we say that the market has changed structure, right? Has changed in character, right? For example, from downtrend to uptrend. You see, for now we're still in downtrend. Boom, boom, boom. Can already see that the market has violated what has took out this high, so we can already use this one as our order block, because the last candlestick before this high was taken out. So we mark it out, and then we mark this low right here as our inducement. So it is our liquidity right there. We wait for the market to do what? To come back, because now the market moves in such a way that you can't always predict it, right? Because some people who are trading support and resistance will be marking this as their support area, right? First touch, they are in profits. They will be waiting for what? For another touch right here, but the market will be doing what? Will take them out. Let's see how the market reacts there. Let's see how the market reacts. Another touch, another touch. As you can see, respected. Another one respected. Let's see how long will the market respect. You can see right there, the market showed us that it took out liquidity. Took out liquidity. Let's wait and see. Let's wait and see. Let's wait and see. Boom. Boom. As we can see right there. As we can see right there, if you went on lower time frames, let's say for example 15 minutes, you could have been able to to um to refine this order block think to lower time frames, right? Let's say this one, because maybe there's a gap, there's like imbalance here on lower time frames, right? Because right now I'm on daily time frame. I'm showing you how to actually spot changes of character and how to actually spot what breaks of structure and trade with the trend, right? Trade with the trend. So yeah, that's how it works. That's how it works. Right. So yeah.